Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Lucky. Terrific. Well, thank you. One moment here. Okay. Well, everyone, thanks for visiting the Trader Lab today. I'm your host, Tom B. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This stream is based on structured trades that are available to everyone at no cost that you can reverse engineer and build into a potential trading plan. The Trader Lab is very much about the business of trading. It's not Fantasy Island. There's no Holy Grail, and there's no secret sauce or the one thing you need. I was going to say, unfortunately, that's not reality. Trading is really a gaming business. It is not a predictive business. And they may sound similar, but they're not. Gaming, the casinos only play games that have an edge. They play them exactly the same way, something typical retail traders do not do. Typical retail traders use a mix of spaghetti or indicators and multiple time frames, and they're not anchored. Anchored means that they're not consistent. In fact, I did a private webinar, which I invite all of you to watch. It's only about an hour long. It's got over 30,000 views, and it's about this process. It's about the business. And if you are interested in that and you're visiting in YouTube, there's a link in the bottom of YouTube where you can access the Bookmap Discord Trader Lab and plus a lot of other resources. And you can download 60 PDFs of these trades, watch a library of webinars, and of course, become part of a serious community of traders looking to develop the business of trading. And all this is available at no cost, but you do have to verify your Discord user name and all that, so you're not a spammer. Also, I have an interesting announcement to make about some special education and streams that are going to be taking place this week in the Bookmap Discord server exclusively for registered, confirmed Discord participants. And I'll be getting to that in just a moment. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. In fact, grab a pen and a piece of paper. I'm going to be showing you some higher time frame overview today so you can kind of see how pieces fit together. My time is very limited, so I have to try to pack a lot in. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Now, before I go on, I need to show you this. Bookmap is having a special series this week. It's very popular. It's in Discord only, so if you're visiting us in YouTube or even if you're in Discord, you have to be sure, if you're in the Trader Lab, that you verify your username so that you get access to these special webinars. Same thing in YouTube. So there is the link. And in addition, I just want to mention, and you guys may not know this, and I just think it's one of the best kept secrets. Everybody, what's the best kept secret? How about this? There's a free digital version of Bookmap with data. And if you are interested in getting your hands on Bookmap, and I wish they had something like this when I started out, you can just click the link in the bottom of YouTube or however you would like to get your hands on it and check it out, play with it. And then if you become a subscriber and if you download the digital version, you are now a subscriber. Then you get all of the education, order flow, special streamers, and the Bookmap Academy. for subscribers only. Coaching, mentoring, analysis by other traders, feedback, things of this nature. So there's a lot going on in the Bookmap server. I have to say that to you because I started trading in 1980 and there was nothing. Now you guys have the opposite problem. You've got everything. That means anybody can go on the internet and, quote, be an expert. And I'm sure there's some out there, but in the meantime, as you guys know, there's a lot of frauds, garbage out there. And I suggest that you do your due diligence, no matter where you get your education, even in the Trader Lab. Come to Trader Lab, do your due diligence. Talk to other traders there, find out. This is an intermediate time frame. Now, I'm going to tell you what this means. And it's really important to understand how the market works. Now, how the market works does not mean we can predict what it'll do. But what we do in the Trader Lab is we develop trade plans that are in alignment with auction mechanics. Now, what is this auction market theory thing, right? Well, I posted this morning before the RTH opened that the market was coiling. Now, this is today's behavior. So we'll just leave this for now. But as of now, so what we had was the past several days, we have what you see, two-sided trade. You can see the wick and the little body and the wicks. So it's really like a standoff. Then what did we do? Let's follow the yellow brick road. This is the low of this day. What do? The market goes down, takes out the stops here, and then closes back inside the previous day's range. Then we come up and we check the high volume over here. Now, I'm not going to go into too much of what this means, but I'm going to go just a little bit further. Down here was yesterday's retail price. And if you guys were in the stream yesterday, you know that we were selling up here, buying down here. In fact, the last trade, and I don't remember if I get to narrate this in the stream or not. I can't remember these, but I narrated in Trader Lab, took along here with the idea of coming up here. So that was the long, and that was, I don't remember exactly, a 20-point trade. I mean, I'm not keeping track of that. But this is more important. This is to understand that these levels that you're seeing are created by the interaction of the participants. Now, here's another piece. If the market is short, so let's say this, let's come back to this. If this becomes too low and we take the stops under here, now what do we have here? Stops are above here. What do we do here? We come down, we test the retail price, this is yesterday, and then we come up and squeeze across, okay? We take out the stops above here. Now what do? This morning, we open near the high of the day, and you'll see why this is important. Take out the stops under here. Come down, test this, and I'll explain what these are, and then reverse and come across, which sets up now this and maybe somewhere up here. Now, let's go to a higher time frame, and I hope this makes some sense. When you see in a profile this kind of stuff, what you're seeing is a consolidation. These nodes that stick out are called high volume nodes. When you get into an intermediate time frame, which is what this is, because it's RTH candles, dailies, and all we're looking for is where's the swing high, where's the swing low. We want to bracket these because then we'll be able to see the volume inside. Now let's talk about what this represents right here. Consolidations are volume, and they rotate. Well, the highest volume here was this. Now, auction market theory is about pricing. Why does the market go up and down? It's a pricing mechanism. So using a volume profile, we might at times, I'm always going to say maybe because that's the best you got anyway, just like the casinos. Maybe if this is a retail price, in other words, high volume, think of you're buying something in a store. If the buyers come up and check this retail price and it's now too high, what might the buyers do? They might go to a previous retail price and check it. down here, which was 54.55. So too high, too low, fair. The fair price, so if all this volume is right there, roughly 75-ish. So we can come outside, check this high volume. This is the high volume for the whole thing. We can come down here, check this, and rotate. If we come outside one of these, we can move out here, or we can move up here, and 97.50 is the outside edge of this distribution. Now, we never have to come out here. We can just do rotations. That's the intermediate time frame. And by the way, post your questions. I'll do my best to take a look at them. And thanks again for visiting the lab. Remember, if you're interested in the special guest streamers that we have, traders that are on there, it's a special event. It's only taking place in the Discord, Bookmap Discord server. And if you're interested in that, there's a link at the bottom of YouTube. You can verify your Discord so we know you're not spam, and take advantage of it. As my mother used to say, free is good. And if you download the free digital version of Bookmap, you get access to even more, and there is no cost. Okay, now let's go take a look. So let's look at those levels again. That's the 75. That's that higher time frame level. This is yesterday's retail price. I'm talking in fractals. So in this consolidation, this was the highest volume. Yesterday, this was the highest volume. At the high of the day was that microcomposite high volume node. Whoa, that's not what you want to see. That's the high of the day, the microcomposite high volume node. This is the microcomposite volume point of control. And this 74, whatever it is down here, 55, 54, 55. Let me come right back and show you the levels. I just want you to see where they come from. So that's the 75. This is a low volume node. There's yesterday's low. It's also a high volume level, but there's stops under yesterday's low. And whoop, did I not put this in here? 54.55. I didn't put it in this one. It's on my other one. Is what's called a microcomposite high volume node. So that's that lower green line. I don't always get to put these levels in here on my streaming computer. It's separate computer, separate Bookmap. Just so you know. And let me move one other thing off of here. Hold on a second, guys. Got to make an adjustment. Something. Okay. Okay. Back. Maybe. Hold on. The chats are on separate monitors, so I don't see them. Please give a thumb up if you're visiting in YouTube. Always helpful. Now let's go into let's get to it, as they say. All right. So open. Key level above, which I showed you. This is important. You review this stream. Trader Lab, very important, because I'm doing multiple time frames. Guys, if you're visiting here, how do we think about fractals? A fractal is a interaction between, and make notes of this, fractals are the same as your time frame without the clock, no time. It is the time it takes for buyers and sellers to interact before there is either agreement or disagreement on valuation. The market then leaves that area and goes to another area to do its thing. Now, the thing about a fractal is it's all time frames. So when I'm looking at an intermediate time frame like this, I know this is a retail price. And when I say retail, a fair price, not necessarily the price we're going to stay at. It's almost like you go to a store, call this a store, and in the store, they've got your product and it's too high. If this in the intermediate time frame is too high, and in the microstructure, I can see too high, then I can have a short because I have alignment to go somewhere. And that's all level base, which would be back here. And there's more. So I'm giving you a sense of Russian dolls. You'll see how this works. So in a high time frame, you could be short, and in a short time frame, you could be taking longs inside of a short time frame in a higher time frame. This is probably pretty confusing for many traders. How can the market be going down and you be getting long? Well, if you have a structured trade in a shorter fractal or time frame, you could be taking counter trend trades subject to how you define a trend. Now, the trend for some traders who are short term are just down. For other traders, it's going to be down to a target and then back long up to a target. It's all up to your plan, and that's what we work on TraderLab. And the beauty of TraderLab is it's not what I do, because I operate in specific time frames. I try to get larger rotations. It just pays better for me because my stops tend to be 2.5 to 3 points, maybe 4 if it's something special, but usually 2.5, 3 points. Well, if I want to get paid for me, now this is just me, I need a larger rotation so I can afford to take the stops when I'm wrong, which I am as much as anybody else. So there's no holy grail, guys. All there is the same way the casinos operate. Edge. What gives me an edge? If I know this, and there's more, by the way, what else do I know? I'm opening right at yesterday's high, and this is my level. So I'm taking the stops over yesterday's high, because there will be some. I've got the open here, and I also have the overnight volume point of control and the overnight mid. I'm going to throw some statistics at you. You have to vet these for yourselves, and I do want to get going. Now, is this over or under yesterday's high? Well, let me put it to you this way. One tick doesn't make much difference. So I'm going to give you some ballpark ideas. There's approximately an 80%-ish probability that we're going to get here based on statistics. And I'm kind of giving you a broad stroke here. There's a 65 to 70% probability we get here. Depending how you're looking at it, about a 70 or 67% probability to get here. Previous settle, gap to settle. This is a low volume node in a higher time frame. If we get through it, it sets up this. For a test, take out the stops, and then I have 54, 55 is my target down here. So that's the trade. So let's see how it plays. So that's before the market opens. Now, what I don't know, part of the joy of all this is, what is it going to do? How do you like that? Nobody knows. So your job is not to predict. Remember at the top of the stream, I said this is not a business of prediction. We cannot predict because it's random. Write this down. We're in an environment that's uncertain. Same as the casinos. They can't predict the cards coming out of, the deck or how gamblers play cards. So they're in a completely random environment, except for what they control, which is their games. They only play their games exactly the same way. They don't make games up. They don't change the games. They don't do what we do. Skip trades, move stops, bail out, operate in fear state. They see their losses as cost of production and overhead. So now, let's go. So I'm looking at this and I'm going, well, let me tell you what else I got up here. I've got the ETH high, and this is the high of the consolidation. Well, I came up here, I didn't get above here, and I'm opening here under here. So I'm saying is too high, maybe too high, or we can open and test this, and if I don't get through here, I have a short. So I'm thinking, well, possibly here, so long to there, and then we'll see. But we have, now here's another piece. The other piece is we have a substantial high tier report, consumer confidence at 9 a.m. Central Time. So we're at 8:30. So this is the RTH open. Now you're putting the pieces together. Key report, market is long. We did not get over this, over here. Key level here. Here we go. Market opens. Now, I'm taking you into microstructure now. So RTH open. There it is. This is called the developing volume point of control. Now, what I'm showing you is fractals. This yellow line develops in real time. In other words, as it represents the migration of the high volume in the developing daily time frame. These are fixed right now because they only get updated at the end of the day as more volume comes into the consolidation in the intermediate time frame. So this doesn't change, but this does. So what this shows me is, what is the pricing? So how do we read this? Now, I don't use any indicator. So what is it saying? My quote indicator is order flow and volume, real time, nothing backwards looking. And just like you, I take stops. There's no holy grail. But if I can reduce or eliminate conflict and ambiguity, even though I can never eliminate uncertainty, which is what triggers our fear and everything else based on our primal wiring. And you can come to Trader Lab if you want to learn about how to manage that, because it's a big obstacle for all of us. The hesitation, the bailing out, all that. Then the fear, FOMO, and all this crazy stuff is all psychologically triggered. You can learn how to deal with that in Trader Lab. It's common. And it isn't willpower, guys. I wish it was. I used to have a rubber band on my wrist. I would try behavior modification, snap it every time, I messed up because of my emotional state. I then thought of getting a cattle prod, maybe it'd make more of an impression. So market opens here. I see my buyer. Now this is the first trade. I see a variable high volume node. I made these names up when I started doing this. It's many, many years ago. They didn't exist, so I had to make up language. Don't know what anybody else calls these things. When I started doing it, I got a lot of pushback from the standard market profile gang. I learned market profile back in the mid-1980s, and I could not do anything with it. And that's my fault, because I still had my indicators, and I said, I'm just going to make this better. VPOC migration. What this says, language now, this is too high. Too high. Break low. Now, this is VPOC migration. I have mid and VWAP, and this is moving away from this. So if I get short, my stop has to be out here. So my first trade is a short. Target overnight mid. You took these stats down. Now I'm sitting short. And I have to go, well, I have another target here, about a 67-ish% probability. This is what we're doing now. This is too high in an intermediate time frame. This is the fair price from the ETH. Once we get, here's something else for you to think about. I'm in fractals now, and I will get into more minutia. When I break below this and I test it from below, it is too high. This is another short if you're in the Trader Lab. Now I'm getting a little advanced in here. What was this? Too high. Intermediate time frame. Short. And the entry is here unless you can operate in here. Okay, I'm saying you could enter here, but it takes a lot of skill to do that. This is more of the structured trade. This is a target here. It is a target. If you got in here, you have a choice. You can scale there or scale here. For me, it was this. Then I'm going for this and lower. Why? Remember, where's the stops? Under yesterday's low. And you have the ETH low. If you don't hit the ETH high, you have the ETH low. And the ETH low has over a 90% probability getting taken out, and then we got this. So for me, low. Low, 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 short, short, short. Hold, hold, hold. So let's watch this. Target. Target. Short. So let's watch these behaviors again. So you have your short, pull back to this, to high, plus the mid, short, back to VWAP, short. These are all shorts. Your risk is up to here. Break, break, watch, break. Now we're just sitting short. Where do we come? Back here. This is another short opportunity here. Let me show it to you again. We are below this. Remember, high volume is the key. It's the secret sauce, which there isn't any, but if I had to say there was one, it's volume. Why? Because it tells us what the shoppers, remember in the store, if you go to the store and the price, the retail price is too high, you won't pay it. You're going to leave the store. So when we come back and check, we go to mid, and remember where our stop is. It would be out here, subject to how you manage your trade. Let me get into microstructure now a little bit for you. What is this? Where'd that come from? It's too high. So this is another short here. Or it's not, you're just managing your trade, and we're going south of the border. Now, let's just keep watching this thing. Yesterday's low for the stops. Now, this is the report at 9 a.m. So all you're doing is you're in a short here. I'm trying to remember. I did take one long in here, and it didn't work. Got to find it. I got a scale, and not so much. I think it was, let me see where it is. It's somewhere. Yeah, it's here. I took a long here. So what I did is I got, now this is just something I did. I'm not saying, anything much about it. Because we got under yesterday's low. And right in here, I'm pretty close to my target. And I said, well, this might right here. So I marked this. And I'm going to tell you, I don't know. There's no knowing. So let's watch. I get VPOC migration, which says potentially lower. But I already got my target. So let's watch. There were buyers here. And I come down and I see my buyers absorb again. I take a long here. And I believe it was right there. Yeah, along there. But I also have, by the way, a statistic that we're going to take out this. So, and that's called the IB 30 stat. And at 9:30 Central Time, there's over 90% probability we'll take out either the first hour high or low. I still have an open target. So I was thinking to myself, well, I can get long to here, come outside, up here, and then come back, and then come down. So this is a counter trend trade. I'm just saying I took it. I'm not saying anybody should take it. And then in hindsight, you go, well, maybe I should. I don't. So anyway, so I get my scale and I'm going to squeeze. So the trade is I'm looking to squeeze the VWAP and the mid. And the reason for that is this is an outside edge of a distribution. And a distribution is really consolidation. All this is, oh, it's too high. Yeah, but it's on sale, retail. So the yellow line is the fair price. If it goes on, think about this like shopping again, because we're shoppers. If this is a sale at the moment, then we can come back here, check the price. Then we can come outside and check the price. It's called mean reversion. This is a mean reversion trade, and I'm trading a fractal. So I'm taking a long inside a higher time frame short. Hope it doesn't make you nutty, but that's what Russian dolls are all about. So I know my support is in here. So anyway, long, scale, and now this is support. Let's watch it. Let me open this up a little more. So long to there, And here, I think the trade is still good. Notice where we come, long to here. So I'm going for this, okay? And that doesn't work. The trade goes not so much. So then what I do here, it was actually up in here. I don't get above this. So I'm looking at, let me show you the little micro high volume. Now what I do, and I'm not saying this is any good, is I'm always looking in fractals and or multiple time frames at volume. So I know this is too high. This is called the variable high volume node. I might have missed putting a few more of them in here on the way down, but I'll check that when we come back up. And then I'm going for this. So what I did was, this is my resistance. So, you know, the long to here is fine. The long to here is fine. And I got to squeeze because I'm just looking to do this and then get short again. Because I have a statistic, because at 9 a.m., if I took out the first half hour's high, there's about a 70%-ish probability I'm going to take out this, and that's my target. So anyway, the long was to there, put the short on, to here, covered. All this is posted in Trader Lab. Now we have another trade. It's called the IBF. Let me show you this one. This is a long. And why would I get long? Because I got my primary target. And it's just luck. And it was 50, and I posted this in Trader Lab. All this is posted. 54 to 55. Now let's remember where these levels come from. There. That is 54.55. There's the current low. So that's why it's a target. So when I come down to these targets, I've got my hand on the eject button. And the market could do anything, it could just keep going. But that's my trade. I just take my trade. Now, the other part of this is, once we get these longs out, then we have the possibility to come above here. And if we do, that sets us up maybe to take this out or not. That's not my job. So we have the high to squeeze and maybe out here. I can't predict. It's not my job. I'm not in the prediction business. I'm in the maybe business. So this is a long. In the Trader Lab, it's called the IBF. It's a structured trade, and that's part of those 60 PDFs you can download if you're interested in understanding what is going on and why. Why? The big question in trading, I think, is why? How do you operate in a random environment? So what do we see here? We come down. This is the target. Now, there's no precision, right? So let's look at what we see. I see a stop sweep here, 353 stops coming out. Thanks for playing. This is when your broker sends you a gift basket and some buy iceberg. So that's the absorption. You see the red dot there. That's sellers. They are absorbed. Now, at the time, you don't know. This is the order flow. So what is the absorption? If you see a red bubble, and I know most of us are red light, green light oriented. Wouldn't we love to just have something that goes, stop, go? I mean, if that was the case, then every retail trader who's walked in your shoes would still be in the business. And for some reason, they're not. And I can't say every, but I'm going to say a high percentage, over 90% don't succeed at this or make a career out of it. They're just passing through. And they're all doing pretty much the same thing. Why doesn't it work? Have you ever asked yourself that? So this is absorption. Now, I know that's absorption, and there's my location. So I'm going, and I have a structured trade here, long to there. That's where this trade starts. That's the first target. It's called mean reversion. So here I'm looking for a long. Now I'm going to show you micro high volume. This is how I kind of look at this stuff. I'm going, well, I see my volume here. I got my sweep. I got my absorption. And here's my location. So it's a long. So let's look at it. Now, I always say in the Trader Lab, and I'm going to say it here for all you guys, we had buyers here. Would you agree? Let's assume you're going to agree. That's why the market rotated up. I have buyers here. I get my sellers again, and they take this out by a couple of ticks. If I get long here or here, My stop cannot be under this low. It has to be further outside. Because if we test, and you'll notice, I think we 1 or 2 tick this, and this is the IB, don't forget, and at 9:30, we're looking for the long or a continuation trade. Why not? This was the target. And once I see the absorption down here, I'm looking for the long. I'm giving you all the reasons for this. Now, why would we get long and yet we made another lower low here? Because the buyers that were here, if the market comes down again and they perceive this as a heck of a deal, they're still going to buy again. My stop is not going to be here. Can't do it. Now you can. I can't, because I know I can get a test. And I also know if I got stopped out because it reached for me and then came back in, I'd go long again, because that's my plan. By the way, getting stopped out, hey, who likes that? Nobody. So you just take it in stride. It's not about you knowing what'll happen or knowing that there would be sellers here. What do I see on the other side? Buy icebergs. These guys were absorbed. There's the 81 stops coming out that were under here. Thanks for playing. Another gift basket coming your way if you're using very tight stops at outside edges. So buyers again. Sellers are here. Let's watch. Absorption here, stop sweep, absorption, icebergs. Watch. Seller here. Buyers are there. That's absorption. Sellers are here. These guys were absorbed. What we want to see is this thing to go up, of course. What do I get here? Are you ready to bail out? Me, my teeth are chattering like everybody else. I'm holding my support here, and then I see my buyers. So I am long, and this is my scale. So let's watch this. Scale, and this is posted in TraderLab. Now what? Where are the stops? Now I have something else up here called a low volume node. I got to put it in here. You'll see how this plays and why. And I'm going to come up in a moment here and talk, I should say, check out your questions. So this is what I know. VWAP. Now we have a structured trade in the TraderLab called VWAP to VPOC. It is a mean reversion trade. I posted in the TraderLab that it is not qualified. And I got some questions, why not? I'm going to tell you the primary reason. The primary reason is the range from the VWAP to the VPOC. The structured trade is from here to here, and then potentially rotational. So it would be from here to here. But what do I know? Let's see what I know. What I know is this is a swing. And where's the stops? Above the swings. There and there. Write this down. Look left. There's a swing here. Well, that is aligned with the low volume node, which is out here. So what I know is, in my long, I cannot go short here because this is at best my target, so there's no range. So no qualification, no trade. The other thing I know is here are stops, because retail traders kind of are like, no offense, we're all retail traders, are lemmings. They all do the same thing. So based on the thousands of times I've been stopped out at swings, I now know that there's going to be stops here, here, and here. So I'm taking the stops coming up. I come to my VWAP, but what do I have here? Stops and an outside edge of a distribution. Remember what a distribution is. Too high, too low, too high, too low, retail. If my stops are out here, I cannot get short. Does that make sense? In fact, where did I go on my long? To here. Right up in here to take the stops out. So my exit on this long was right above the mid, because the stops are here. Does that make sense? And that's the last trade I took, because I need to stream. Questions, guys. Now I'm coming up for options. and then I'll explain all this to you. How we doing? How we doing in YouTube? Are you guys conscious? Always worried. Please give a thumb up in the bottom of YouTube there if you're getting something out of this. Remember, there's a special series, professional trader webinars exclusively for Bookmap Discord uh, participants. There is no cost. Also, no cost to become part of the Trader Lab community. You can use the link in the bottom of YouTube that says Discord on it. And then all you got to do is confirm your Discord email address. And also, there's a free version of Bookmap, a digital version with data that I think you might want to get your hands on. And then you would officially be a subscriber, and then you'd get all the exclusive content for subscribers, as well as the Bookmap Academy, which is coaching, mentoring, and a great bunch of guys there who can help you further your development as well as the Trader Lab. So, questions now, and then I will come up for air. And thanks for your patience. Hope you're getting something out of this. This is how to use order flow with auction market theory and the volume profile. And remember where we may go out here. But I won't go into this until I see your questions. You got questions? Drop them in. Well, Candlestick Cricket, hi, welcome to YouTube. I think I've seen you here before. Thanks for visiting the lab again. If you're interested in what this is about, the Trader Lab is about building the business of trading. It's for career development. And of course, not everybody can do this. It takes a lot of education and understanding. And for most of us, if we've been doing this for a while, getting rid of things that don't work and understanding how to define what working is. Many of us, most of us, or all of us at one time or another have seen random behaviors that appear to repeat, but they're still random. So we try to put some structure around them, maybe indicators, oscillators, moving, pick one, envelope, something or other. So when it shows up next time, we get it, and then maybe it does show up. But in between, we're taking the same trade and we're going backwards. But it does show up. Now we think, oh, there it is again. Let me make it better. Gee, that trade worked really well yesterday. Let me put something on this. And look at that. Over the last 2 weeks, I would have got these 20-point moves. So next time I'll get it, right? Well, that's not trading, guys. That's curve fitting. That's curve fitting. And unfortunately, the market doesn't care about that. The market is really every moment of price discovery. What creates all this is the interaction of the participants. So what we have now is we took out the longs, the stops under yesterday's low. So where are the stops now? Well, over today's high, which was here. So what you do is once you get the IBF, you can come out here. Now the next trade here to be thinking about, and there's two possibilities, and these are not recommendations. If we can't get through here, and we might only pop, this is a very interesting area. I have no specific trade for this. I will tell you this, though. This is the retail price in the developing daily time frame. And it certainly looks like we're going to go north because we took the stops out under yesterday's low. That actually makes it bullish because you take the weak longs out, then what you have is weak shorts who are now getting filleted, and you have the shorts above this high. So now think of this in fractal. Yesterday's low took out the sell stops. Where's the buy stops? Above today's high, which was there, and above here. So for me, I don't have a short. If anything, maybe longs. And these aren't recommendations. Or no trade if I don't get location. I just wait. One of the things about trading, guys, you're not here for action. Now, you may think that's what the business is, but this is not a video game. It's really a strategic business because we see trades everywhere. You could trade your brains out, but have no edge. And then you're really just gambling, And I always say, go to the casino, get the cocktails and a ticket to the buffet, because that'll be more rewarding than trying to trade this. Now, if we do come back, this is the target. But in my thought process, there's no short for me. If anything, there's a long here. And here's your outside edge out here. So if this wrote like this rotation here, let's look at the microstructure. Now, I'm not making trade recommendations. This is all a function of your trade plan. Let's look at a potential long. Now, there's two possibilities here. There's one, once you break high and you come back here, this sets up something called the IB continuation trade. That's a long, and it would be back to the high volume up here. So that's one possibility. I'm going to mark this. The other possibility is we come up here. If this fails, then we come back to this. So you got two possible trades here. Here's the other piece to this. Out here is called the low volume node. Let me mark it. And what is a low volume node? I showed you one coming from the other direction. So now we're just going to watch this. And these are not trade recommendations. This is kind of what you call your funky location. So let's look at this. Too high. Where's our outside edge? It's right out here. So where did this right here was resistance? This resistance becomes support. We are over the overnight volume point of control. We have our buyers. We come back and check the IB high. And what else do we have? High volume over here. Remember where this came from. This was our resistance. Resistance becomes potentially support. Now we're in a micro structure, and you can look at the high volume here. Let me open this up for you. Now this is fractal and this is advanced, but I'm just going to show it to you so you can kind of see. And there's more, but I'm not going to get into more detail. So this here had our absorption. So what happened here? Let's look here. Buyers, sellers took a shot here. These selling icebergs, and there's 555 buy stops. Thanks for playing. Another gift basket's going on. Sellers are here. Sellers are here. Sellers are here. You can see the absorption. Where was the urgency? Here. So I come back here. There's my buyers. Again, sellers try here. Sellers try here. And there's my buyer. So let's look at this. Buyers are here. Sellers are here. Buyers come back in over here. Absorption. What do I have here? Buying icebergs. Buying icebergs. And this is all a suspect. Nobody knows. I get my buyer. So now I have what's called the IB continuation trade. There's two ways into this. I'm going to label another micro high volume structure. Now, this is very much fractals, and this might be not your thing. I get it. So this is your support, and your resistance is going to be up here. And it also can be that, but let's assume it's up here. So now what we're going to look for, and this is not a trade recommendation, is to come out, test this, and go north of the border. If it doesn't, if it falls back under here, then we're looking for this. So it's one or the other, right? One or the other. So from a structural point of view, and again, it's only, I like to use the term clueless, which doesn't mean ignorant. It's a educated statistical guess. I have two trades here. I have a long continuation trade. The scale would be here, and it's got to fit your plan. It's only a couple points. You got to use a shoehorn. And if it doesn't fit, remember what happened at the low of the day. This was the location. What did it do? It tested it. Where does the stop go? Not here. You got to be further out. Right? Where are we trying to go? Where else can you get long? Well, none of us buy this. Maybe you do. I haven't figured it out yet. Me, I get long here. My stop would be under here. And this is my scale. And I wear a helmet. And when I say a scale, it's like one or two ticks in front. Because what is this? It's a consolidation. Why did we leave it? This price was too high. What is the nature of the market to do? Check pricing. What do we think of this? Too low. What about this? Well, it was too high. Let's come back and see if it's still too high. That's how this thing works. So we'll see. Either it does or it doesn't. You know, if it doesn't, it doesn't. So this trade this is a very tight trade. I consider this borderline because of the range. So subject to your plan, you might not take this trade. I find this one borderline because my job is to get risk neutral. And I need the range from entry to here and ahead of here to get scaled so then my stop can stay out here. And the worst that happens is I scratch. That's pretty much the way this works. Now, my outside edge of this distribution is here. That means I can come out here, pop this, and still come back. So that's one part. If I get substantially below here, I'm coming here. So we know that. Now, and by the way, we don't know what it'll do. We just know what it might do. Now, let me take you someplace else. You remember how I was saying when we were coming up from down below the long that this was an outside edge and there were stops above here, right? So it was out to here, primary trade. Well, this is the same thing coming from the other direction. It's out to here, low volume node. So what I'm doing is this is the volume, this is the outside edge. I get above here, I continue north. I'm now above this one, which is the highest volume. If I'm above here, and now this is the retail price, I can rotate in here. I can come out here, pop this, abuse a few of us, and then come back here and out the top. So that's why this is a long, but it's really a borderline trade. And this is where you have to prioritize what you're doing. Are you long from here to there? Does that fit your ability to get risk neutral? I will tell you, in a career, there's thousands and thousands, thousands of trades. Are you compelled by FOMO to take a trade that doesn't have a minimum range to qualify? Or do you just say, I have a long here, my range doesn't fit, I don't take it. Now I'm showing you the trade, but I'm also putting in all the other pieces that you need to know in a trade plan. It's not whether this goes from here to here and takes out, the high of the planet and we go running. It's about this trade uniquely right here. Questions, guys? Please give a thumb up in YouTube. I hope you're getting something out of this. There's been the top 3 things. I think I covered them in the stream. Watch the stream again. By the way, guys, if you're visiting in YouTube, these streams are available exclusively to Bookmap Discord Trader Lab participants, reverse engineer, screenshot, and the rest of it. If you're visiting in YouTube, if you copy this link, you might be able to watch this again after hours, but typically they're not available. Also, if you copy the link, be sure to send it over to your trading buddies if they are still hooked on indicators and don't understand market mechanics and how it works. And everybody takes stops, by the way, so we don't get away from that. But if we understand market mechanics, we might understand what this is about. And then either we're going to take this out. Remember where my outside edge is. It's out here. The market can come under here and then come back. So that would be mean reversion. This is your support, remember? And we are going here. And it's not a recommendation, but I want you to see structure. Alan, you're saying go over the VHVN to VPOC trade? I don't think we have a VHVN to VPOC trade. Where was that? If you're talking this, Yeah, okay. I have no VHVN to VPOC trade. I have an IBF. So this is not material to me. It's material for a scale. So the long is out here to here, variable high volume node. There is no long from here for me to here. This is not a trade. It could be back to here, if you want, but this is already done its move. This just passing through for me. So this is not a structured trade in my book. Hope that answers your question. Balian, how are you? Haven't seen you in a while. So this trade is going to take a stop, and now we're mean reverting back to here. So this will set up a return here, not a recommendation. So this is now called a neutral day. It's always a possibility, and what that says is, and we can still come up here later. Doesn't mean we won't. There's no way to know. So this is a bit conflicted because you got a couple possibilities. You can come back here, or you can come out here and then come back. So this is a hard trade right here. Remember what the key to this trade is. You're trying to get back here. Here's our outside edge. So there's our stop pick. This might be a long here. I don't have any trades because this could go either way. All right. This trade would have taken a stop, and this might only come here, remember, and be a long and come back across. So this is a rotational trade. So this is what you have. You have a long from here, maybe to there, didn't get there, got there. That's another LVN. And now we just took out this LVN. So the thing is, and this is mixed right here, guys, we can come back up here or back here. And I can't tell you which one. This sets up a short here to here, but I think it's a tough trade because of this. So we'll see what it does. Remember, here to here or here back to here. Let me look a little further here. Yeah, Alan, I don't know what you're asking me. Repetition with variance. Bailey, could you clarify that a little bit more for me? We got our buyers again, it looks like. Well, I'm not sure if you're saying variance. I think maybe what you're asking is the ambiguity of if this, then that. Unfortunately, this is like you've got two scenarios unfolded right here, and one side is going to, take the ball. This is the key location here. That's why the long would be up to here and maybe come out the top. We have a neutral day. What you don't know on a neutral day is, are we going to continue to squeeze? I suspect the squeeze because of what we did down here, and that we came all the way across, and now the market is short and we have buy stops above here. So it's kind of conflicted for me in the sense that I think the longs ultimately might have the edge here, but it doesn't mean intraday that we can't come back here. See, that's the thing. So I know I got two trades here. That's what I know. And that's all I know. I know I got a long. And then if I can't keep going, then I can rotate down to here and maybe back here. Out here. So I can do, if I get under here, I can come back here and do one of these deals. Or I stay, see, what you have are two distributions. You got this, which is an outside edge for potential longs out the top. You got this also, if I fall under here, to come back here. That's what we got. So, and I see, my thing is I can't predict because none of us can. We can suspect. So that's why there's two trades here, a long and a short. But I suspect, and that's all I have suspicion based on what we've already done, and that we've come above this out to here, that we can still go up. So right here, it has to clarify itself. So I don't know. I don't know anyway. So it's not my job to know. Here's what I see: absorption. Sellers are here. They're absorbed. The buyers are above this seller. This looks like a long to me. So I'm not taking a long, or if I did, I wouldn't be discussing it here because I don't call trades. But I would, I take stops too. So if you're not, by the way, guys, if you're looking for the, we don't want to take stops. No, nobody wants to take stops. But protecting the account is more important than, quote, being right. So I take stops on it. What can I tell you? If you don't take stops and come to Trader Lab, let us know how you do it. And the answer to that is not keeping your stop like 100 points away. Absorption. These are very important locations here. We'll see what it does. So we're either coming back over here to here and maybe to here out the top, or I won't belabor it, we're going to fall back here. That is the two trades here. And I can tell you, and now I'm going to say is being a guessing, and that's all it is, the long. But it can still come here, rotate down, rotate back up, and then we'd be in a mean reversion configuration. So for me, it's longs. Here's the thing. Fractals, let's talk fractals very quickly, and then I'll look up again for questions. And guys, if you're in YouTube, remember, you can visit the Trader Lab, download 60 PDFs of the trades you're seeing here, and then you can learn about the business of trading, reverse engineer, and make them into something that's edge. This is a distribution. So the nature of this thing is to do this. If we fall out of it, then we just move down to another distribution and we get to do this. That's why this is an over-under. And my inclination is to want to be long, as you know. So this is still a long. So for me, if I get stopped out, and I don't want to call trade, so I already told you where I'd be looking further outside if it got there. This is now a long. And, you would see the absorption. You see the buyer above here. Right here, the buyers get above that seller, and we're above this seller. This is a long, and you're going to try to go here. It's not a recommendation. That's why this is an outside edge, and it's a funky location. But why would I be thinking the longs? Because this was my resistance. That was my support. This is the fair price for the whole consolidation. If I get above here, this is the whole enchilada, 97.5. If I can squeeze out, and remember where the stops are, there, which I'm getting already, and if I can stay above this area, then it sets up out here, and maybe through out the top. If we do that, it can be rather significant. Not a recommendation, it's just the lay of the land. And where's that out the top is? It's there. So that's why this was the outside edge. Any questions? Is this making sense? This is how the market works. Now, let's talk indicators. Where's my indicator? I don't have one. I have behavior. What is different about this than the long I was looking at? I think it was over here. Nothing. It just came further out a little bit. So if I take a stop and I get long again, I'm still coming for this and out the top, if that's my plan, and for me it is. Is this making sense, guys? And if you have questions, please post them. This is Trader Lab, and it is what it is, you know. I can't, Ellen, I can't look at that and understand what you're talking about. It's just, I guess if I didn't narrate it and I didn't discuss it, then maybe it's not. Remember, it's not what I do, it's what you do. So, what I'm trying to do now is come up here. Why? Because this is too high. So, if I think the trend is up, then I want to be long. See the urgency in the buying here? Sellers were here, sellers were here. Buyers are here. Notice the buyers here, and then we blast off. Might this be support? Remember? Wasn't this a long we were talking about? And all we did was pick off the stops, get a trigger. They were absorbed. There's the stops. Here, Tom, if I was trading, I would take a stop here. Perfectly fine, other than my emotional response to it, which is growling and chewing on the edge of the desk. But that's human, you know, that's the humanness, not the trading business. It's how you feel, which has nothing to do with our business. If you're guided by your feelings, you have a problem for being a trader, because we are humans and we are emotionally wired, fight and flight and the rest of it. And then let's assume you got stopped out here, like I would. And then you're in an emotional state of frustration and anger, and you don't put the trade back on here. And then this is the rotation that actually takes you where you want to go, which it may or may not. Are you okay with that? Or are you hung up in your feelings, not working the business, you see? That's what most retail traders struggle with, because they don't understand that the business of trading is taking your trades and accepting the random outcome. The fact that this one didn't work, I mean, you know, how do you grade yourself, by the way? The way I do it is I have a trade plan. And my job is not to get smart and go, I know what's going to happen, because I know I can't know. So my job is to take the trades. And if I take a trade and I take a stop, is that a failure? No, it's a success, because the statistics suggest to me that I will, over time, even though this hand in the casino may pay a gambler and they walk out with dollars, overhead and cost of production, since I'm in the business of trading, I have to put my emotions aside and put the trade back on, and I'm going for here and out the top, not a recommendation. Does this make sense, guys? This is the Trader Lab. Dudes have been IB30 trades. I don't trade them. Well, let's put it this way: they're not in the structured trades. They're different. They're advanced, and you really need an understanding of structure. You can take an IB30 trade if you want, but if you're not taking IBFs and understand, IB30 is advanced. They're not. I have not included them in the structured trades. They are derivative trades. So I'm going to suggest anyone who doesn't have the broad strokes, you don't want to get into the shorter fractals. So we're going for the scale here. So this is the same trade, you know? I hope you're okay with that, guys. Are you guys okay with this? From here, and you wouldn't get this. You'd probably be buying this. 84, and you're going to scale just ahead of this. I give them 1 to 2 ticks. And then helmet. This is next, this, and maybe out the top. You can have a nice move setting up here today. Any questions? This is Trader Lab Trading, and it is what it is. I'm going to say is no holy grail, no secret sauce, no precision. It's just random. Write that down. Random. By the way, let me show you the 60 PDFs. Just going to be a moment. I got iceberg buying here. 222. It's a signature iceberg. We see 222 come and go, kind of irregular. There's absorption there. That was the iceberg. There's the sellers. They were absorbed. The buyers are still absorbing the sellers. There's another scale, or a scale, I should say, from the long, and now it's trade management. Please give a thumb up in YouTube. I'm now going to show you what these structured trades look like very briefly. They look like this. There's a link in the bottom of YouTube. If you're interested in downloading these, you can reverse engineer them. Come to Trader Lab so you understand how to use these. This is not something you do in a vacuum. There's explanations. And I'm not a vendor. There's no specific course. It's the community that builds these plans out, works together to make something better. These are actual trades I took. All others are screenshots. Traders were asking me a number of years ago, what are you doing? And this is what I do. And I've been doing this going on 45 years. That doesn't mean I don't take stops. It doesn't mean I don't have days where I have a loss limit. Let's be real. All these internet gurus are out there, and it's nonsense, in my opinion. We've all either gone in the chat rooms or paid somebody and whatever, and there's always value to some of it. That's our rationale. But if you're doing the same thing and not getting a different outcome, then it's Trader Groundhog Day. Trader Groundhog Day is waking up, getting excited, thinking you're on the right track, persisting, having a positive attitude, only to have it break down. And then you go and retweak, retune, right? And now you go in this cycle. You keep waking up in the same place. I created something I call the Trader Groundhog Day, and I did a webinar on it. By the way, there's a library of webinars that go with those 60 PDFs and a lot more in the trading library of webinars. And I don't know how many there are now, maybe 30 of them or so, that are very focused. Just like this one, I think is a very focused webinar. Maybe we should make this one public. I don't know. I have to talk to Trader Lab and get if they want this in the library. In the end, it's not what I do. It's can you understand how the market works? It isn't your indicator is an output of participant behavior. All I'm doing differently is I'm reading the participant behavior here. Is this a short? Or is it a continuation? What is it? Can your indicator answer the question? Can your indicator tell you why this is a long? Does your indicator get you long here, or would it get you long there? For me, if I'm going to get into a trade, and I'm just talking about me, I'm a little allergic to unnecessary risk. Now, we take risk every time we step in the market. I get it. But how much risk are you going to take? For me, my stop's going to be under here. My scale is going to be here. By the way, this is the same trade that we were talking about over here. Same trade. All it did, and I remember I said, this could be it, or we're going to rotate out here and then come here. I know that before the fact. Let's talk about what I know. I know I don't know. So that's why this is a long, that's a stop. This is a long, that's a scale. It's the same trade. It's just from a little different outside edge. And now we're above here. Where am I going? I'm now managing my trade subject to my trade plan. Going north of the border. And we could have some acceleration here. Not a recommendation. Everybody's clueless. Please give a thumb up if you're visiting in YouTube. There's a link down there. If you want to visit Trader Lab, you want to join a serious community looking to build out a career in trading, make it a business, not a hobby, not a video game. And that doesn't mean that you will be successful. There's a lot of elements But I believe anybody can learn to trade if they have, of course, the mental capacity, that they have the stomach for it. In other words, the persistence it takes and the emotional turmoil that'll be created operating in an environment of uncertainty when we seek certainty. The last thing we want psychologically or are adapted to is uncertainty. The primal wiring that helped us survive in the species runs from uncertainty. Is there a saber-toothed tiger out there behind the rock? You know, well, let's not go there. Go the other way. It's safer. So when our job is to trade, we're actually stepping in front of risk when our primal wiring is the exact opposite. That's what causes us to bail out, not follow a trade plan, move our stops to break even because of fear of loss. All those are emotional stimulants. And those can be worked on and managed, and you can do that in TraderLab. I personally believe if somebody has the capacity, anybody can learn to trade. Not everybody can trade. And there's a lot of reasons for it, but you can work on it in TraderLab if that's your interest. This methodology is simple. And a lot of us think that the answers lie in complexity. I did early on. I built trading systems, and they were very complex. So I thought I would isolate the right combination of time frames and math-based outputs and optimize them. So I did optimizations, walk-forward testing, and I was managing dollars over a number of asset classes when I was a manager, fund manager. So when I was doing that, I had to have a way to manage, bonds, S&Ps, currencies, metal, all of it, oil. So I traded all these things plus spreads. And so all of it was kind of automated, but it would always break down. And so I had to always re-optimize it. But think about what optimization and curve fitting is. What you're doing is you're taking the past and you're trying to fit the present into the past. Well, today is as unique as this last rotation is. We can't predict anything. We can now, with the auction is a little different in the sense that while we can't predict anything, we can identify levels of participant behavior that happened in the past. It's not support resistance in the classical sense. It's auction. What do the buyers and sellers perceive value to be? The purpose of the market is to figure out what's its worth. What is this thing worth? Well, maybe this is now too low. And if it is, and this outside edge of this distribution or consolidation, depending what you want to call it, but in volume and auction world, this was your outside edge. Oh, it's on sale. Let's come back to retail. Where's the fractal? Retail. I can extend north of the border. What's my job now? Manage my trade and sit back in my Barca lounger. Guys know what a Barca lounger is? You sit back and you follow your trade plan, not operate in emotional stimulus of fear. Oh, what should I do? It looks like it's going to reverse. Do I hit the eject button here? Is this the high and now we're going to fall back here? Here's the answer. Maybe. But what do I know? I know this is too low at the moment. If I don't come under here and I can continue above this absorption, I continue along my merry way. If I break back under here, this trade is over. It's as simple as that. Any questions? Dutson is asking me if I come through a microcomposite high volume node, does that become stale? No, it doesn't. It's still important. Now, the thing about this is these levels are intermediate time frame levels. They're higher time frame, and there's no precision. As you go up in time frame, there's more slop. This is also an important level. If we come back in here, we can come back here. E3, E5, these are icebergs. So these are selling icebergs. This is in the limit order book. So this is showing me the sell icebergs. Now look here, 578 buy icebergs. That's there. Now the icebergs are not, by themselves. They're always going to be active in here. They're in a different business. But at the moment, what I'm seeing is buyers. Let's put the pieces together. I'm above an important level at the moment. I'm seeing 500, 400. And when I see sellers, I'm seeing the absorption. This is the icebergs. So at the moment, the icebergs are accumulating. Now, that in of itself does not mean we won't come under here. They're in a different business than we are. For me, this is the support because the sellers were absorbed here. So right here, I have my sellers being absorbed by my buyers. So right now, and it doesn't mean I can't come out here, I can't do anything. I'm still in the go north, young man, go north until it isn't. And then it's just one trade. Now, this might be hard for some of you guys. Why? If you're hung up on this stuff, like, a rotation here, and now maybe we get a rotation, is this what you're trading for? Or are you trading maybe to come out here, which it may never do? It's not the point. But I know if I come out here, we could get going. In fact, I'm going to check something here for you guys. Let me check something. Resting liquidity is sitting up here, and we have resting liquidity up here. These are, and you can see them in the limit order book. This is the heat map, and it's showing me, and now there's a bracketing algo that's operating in the, so this is filtered in the Ds. So let's see if that bracketing algo is there. You see this bracketing algo? So it distorts the heat map. So all I need to do is go and look at where the resting liquidity is. So it's up here, and then we have this. I am suggesting if we get here, and who knows if we will, not my job, we can accelerate. And then I have no idea, because we're up kind of in the ozone. So also, when you get into lunchtime, things could get thinner, and you might get more rotation. So this is the last trade. It's currently a long, not a recommendation, and trade management. If it comes back under here, the trade will be over, and it doesn't matter to me. It might matter to you, because then I'm going to be looking, possibly, if I come under here, I'm coming here. These trades are all known in advance. What's not known, of course, is what's going to happen. Let me remind you, if you're interested and you're visiting in YouTube, there's a couple things. We have special events going on this week. You need to verify your Discord user email if you want access. This is going to be in Discord only. You can also visit the Bookmap Discord Trader Lab community if you're interested in building out the business of trading. It's a terrific community. It's about business. It's not romper room, and there's no holy grail. Also, there's a free version of Bookmap, digital version. You can download that if you're interested. You then would be a subscriber to Bookmap and be able to get all the Bookmap exclusive subscriber streams and education, including the Bookmap Academy, and also mentoring, coaching, and the rest. It's all available to Bookmap subscribers. And by the way, the digital version comes with data, so you can get your hands on that. I think that's pretty cool. If you're interested in this, I'm going to make this stream public. It'll be available in the library. Plus, if you're interested in the Bookmap Discord Trader Lab, there is no cost. You're all invited to visit. Also, Be sure to watch the primer webinar. It gives you a high-level overview of what you've seen here today and you see every day in the stream. Please give a thumb up in YouTube. It helps the stream. Subscribe if you want to get more information and education, and if you want to be notified when there's other events that you might find useful. This is auction market theory using a volume profile and structured trades that you can vet and download those 60 PDFs of these trades in the Bookmap Discord Trader Lab, and then it's up to you to vet them and determine whether or not you can establish a statistical edge. Thanks, guys, so much for visiting the Trader Lab. Grab the link up there. I'm going to show you again just a couple more little things. If you haven't seen the 60 PDFs, this is what they look like. There's a lot of minutia and detail. These are actual trades. Also, some of these things I work with Bookmap developers. This is back in 2020. Just letting you know some things that I did. This is a short. This is a short. This was a target. This was a target. You'll see the same things over and over. And this is something, stopping icebergs. All of this can be put together. These are the targets. This is a target. This was another target. All of this is the same thing you see me doing in the stream every day. So you're welcome to all these. You can download them, and there's a lot more. The thing to understand, trading is not a red light, green light business, in my opinion. It is a structural business. So you need to understand how the market works, market mechanics. And then losses are part of it. Giving back open trade equity is part of it. Whatever happens, happens. It's just one trade. And it's important that you learn to understand the business of trading. And then adjust it to your psychology. Where's our outside edge? It's here. Where's stops? Under here. So this trade will fail under here. This was our scale, remember? So this trades from here to here. And if you get taken out here, you're still going to have a burger basket and fries. And then possibly you're coming back here. That's what I know. That's all I know. Does this make sense, guys? Please give that thumb up. If you're in YouTube, it helps the stream. Subscribe to the channel. Verify your Discord email if you want to attend the Discord specific streams by other professional traders that are going on this week. They're very popular, and it's always good to see what others are doing. They'll be going over how they use order flow, how they manage their trades, and their specific setups. And you never know what you might come up with. And that's what education is about. It's not replicate what somebody else does. It's understand how the market works, then isolate behaviors, and then you can use the structured trades I've shared, and then you can replicate them, reverse engineer them, and see if you have a statistical edge. That's the business of trading. Thanks for visiting Trader Lab, guys. This stream will be available exclusively to Bookmap Discord Trader Lab participants. Of course, the 60 PDFs are available to everyone. You need to verify your email, and the library of webinars is also available to everybody exclusively in the Bookmap Discord Trader Lab community. Thanks again, guys. If you're interested in the business of trading, feel free to visit the Trader Lab. Look forward to meeting you there. Appreciate you guys visiting the stream today, and I will see you guys tomorrow. Thanks again, guys, and have a great day.